The numbers were hot again, more than expected, but then they sold off, as you can see in that 5-minute bar, like crazy, and they couldn't follow through. And consequently, we're getting a rotation back up here a little bit. So be careful. Obviously, I don't have to tell you that because of the craziness that's in the market these days. They were expecting 195,000, comes out at 261. So again, the unemployment number is hot, which again, what the Fed is looking at is not good in that sense, right? That's what the Fed looks at, and consequently gauges its reasoning for raising or lowering or keeping the pace of interest rates where they're at, or how fast they're going up, blah, blah, blah. You know what the story is. And the market right now, for whatever reason, just missing it, right? I mean, after the first number that came out, you see bond market, both of them broke because obviously it's the market's still hot. And you have this rotation here. 261,000, a lot more than expected, larger than expected monthly wages increase, which adds to inflation at 0.4. Labor force participation falls to 62%. All of that is unsettling for the Fed. All of that doesn't bode well for what, but as you can see here, doesn't matter, right? As they're up here. Who knows? This is why we don't trade numbers or don't try to assume or try to understand what numbers mean, because the market has a mind of its own, right? These are terrible numbers, and we basically almost retested yesterday's low, but did not. So then came right back up in a flash. So a lot of volatility here. You almost rally, what is that, 80 S&P points in a hour since the numbers came out. So very difficult to try to predict why markets do what they're doing. We are not that smart. All right, coming down here now, we got a little support down here at 72. We were just going to consider this, the upside potential. Again, whatever you do, understand that there's a lot of volatility. The volume's really thin. Keep your stops in place. Do not love anything or any trade that you put on. Right now, 4 points is what we're looking at as stops, and probably or profit targets minimally. I think we can do. You could probably, depending on how many contracts you trade and how you get in, and if we get in the right area, we could probably do a little bit better than that. If you look at the chat box window, you will see the levels that we just gave out. They are a guide to the day. We could tweak those, we could add to them, we could adjust them. We could even say that some of them are not going to be viable because the market price action dictated we have to change those numbers a little bit. But they are there as a guide to the day as we quickly come back here to these 72 lows. And remember, keep your stop in place. Do not love any trade that we put on. It's not what we do here. All we're trying to do is take advantage of ebbs and flows of the market. Looking to scalp the market, like I said, for about 4 points on some of these trades right now. That seems like a good area. Keep us in the game, and we'll see what happens from there, right? All right, of course, it goes down to the 74 area. 74, I keep saying, always love 74, right? It's annoying how good that works. Again, at 70, even though I didn't give you 74, some of you maybe might have taken 74 because it is 74. You know how I feel about 74, blah, 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 blah. Anyway, it is what it is. Let's see what happens. Be careful there at 72, given the fact that we got here down to 74, especially with the volatility, especially early on. Again, if anybody has any questions, please feel free. I do not like to talk so much. I'd rather talk about something important, like some question that you might have, because that's important. Questions are important. Okay, let's see if we can find what else is coming out today that might interfere with us, but obviously it doesn't really matter because it's unemployment. Again, the market, the economy is very, very strong here, no matter how you slice it. That's one of the reasons inflation is really high, because people have jobs and people are spending money. Um, you don't have that. It hasn't tightened up yet. I mean, I think it's starting to. I think some of these corporations are starting to lay off some people, but we'll see what happens. Let's see if there's any other number. Again, if anybody has any questions, feel free to ask in the chat. We have nothing coming, nothing else of importance coming out. So it's a good thing, I guess. Market participants will get more data from the U.S., the state of U.S. economy. U.S. employment. U.S. employment today, as the Labor Department issues its summary of employment situation, commonly known as the monthly jobs report. The number of American working is important because the Federal Reserve pays close attention to that figure when setting monetary policy, and has only been growing in its aggressiveness as the central bank ratchets up interest rates in an effort to suppress demand and tame inflation. Job growth has been remarkably resilient, which has kept the Fed's confidence in its rate-raising campaign. All right, and again, as I said, let's be a little bit careful here around the 72 area, but if you're taking it, it is a level, and kind of just keep your stop in place. No matter whatever we do, we're always keeping our stops in place. Nice little rotation here off our 72. Again, if you're trading multiple contracts, good exit strategy along the way, right? You can scale out just as easily as you can scale in. Got up to 75 there and rotated off. And market slowly continues to slowly downtick. Obviously a little volatility here, right? So got next support down here at the 58. Again, we warned you about the 72 because of how it reacted around 74. And if you did take it, maybe, you take some quicker profits because it's a lot more tenuous, right? There's different ways of trading. You don't have to just keep your stop in place and exit strategy. Sometimes you can adjust to the market and the moment. And that was one case in point right there. All right, market continues to slowly downtick here. Well, slowly is an interesting word, but anyway, got support down at the 58 area. See what it wants to do down there if we get down there. Non-farm payrolls are expected to increase by about 200,000, got up to 261, down from 263 added in September. Now, additionally to the number that was hot, they had a revision from last month, which was even greater. So employment is still very, very strong. Average hourly wages are expected to rise 0.3. It rose 0.4. So again, those are all part of what the Fed looks at to consider how far and quick they're going to raise rates. We are seeing many microeconomic signs of this strength of the U.S. economy, with strong labor numbers and signs of GDP growth. Economists at website Monster said. As a result, the Fed will likely be further emboldened to continue its aggressive inflation fight and stay the course. Well, that's true. It's good and bad, right? I mean, it's good that the economy is staying so strong as we continue to downtick here, looking at the 50 area next, 58 area next. Okay, market slowly, quickly down ticking. Okay, coming down here to the 58 area, got here down to 59 and change. All right, now coming down here to the 58 area. All right, coming down here to test the 58 area here a little bit. See what it wants to do. All right, there's a nice little rotation there against our 58. Got up to 175. Let's see if we can get up to that 4 points. Again, hopefully you're peeling some profits off here. And there's our 4 points with no heat whatsoever. You gotta love those. And obviously a little bit more if you are scaling out with multiple contracts. Okay, there we go. This is how you can take a little bit more than 4 points out of these trades, at least today. But whatever you do, make sure you have a trailing stop or whatever. If you got any extra contracts that you're trying to, sneak a little bit more than it. And there we go. Nice little pop back up here. All right. Nice little opportunity there for us. Again, if you kept it, we warned you about the 72 because of the price action. And then we said we got 658 next, came right down to it, got 58 even got 58, believe it or not. And nice little pop back up here. But hopefully you're scaling in, maybe 59, 58, 57, somewhere in that range. But you got them all. Some of you might be doing 1.5 with the extra volatility. All of these are different concepts and ideas for you, right? Okay. Continue to downtick here. Next level we're looking at. VIX is at a 24. It's if we continue to push this thing down, we might be a little bit worse than that as we continue to downtick. Looking at the 48 next. So the traders come in, they tried to push it up, they couldn't push it up, just like they tried to push it down, they couldn't push it down, and now they're coming back up here. Looking at the 48 as our next support level. All right. Market is a little bit nervous. They don't know what to do. I mean, they had a huge rally off the number again, and then the traders come in there like, wait, this is a bad number. Why are we rallying? Well, why would we rally? I don't know why we even rallied, but I mean, what do I know? All right. Of course, got down here to 51. We're looking at the 48. Again, all we're trying to do is take advantage of ebbs and flows. That's all we're trying to do here. Quickly coming down here now to the 48 area. Quickly coming down again. Keep your stop in place. We are not loving any trade we put on here. Just let's remember that. Very, very volatile little trade here. All right. Again, if you got out, you got stopped out. I get it. Yeah, you were again. I'm working the order. I know that it got down to 44 and change there, and the double bottom. So I'm using that as a backstop for me. Keep adjusting my orders here. All right, that's good. Oof, that was a little bit of yeah. So what happens in this market? It's kind of just going all over the place. All right, we did get down to 45. Just as an aside, the middle of this range was 45, and hopefully you were able to hang in there with the 48. And get a nice little rotation here off of that. All right, so again, the middle of the range there was 45. So hopefully we're able to hang in there. We just got right under there and then double bottomed very nicely for us and then pop right back up. Right, if you did get in there, got down to 44 and a quarter. So if you didn't have your 4-point stop, you hung in there. Good trade. Got through by our chinny chin chins. We hung in there with that one. Hey, we need to get lucky once in a while, right? Right? Okay. Oh, they did get down to 44. Right. Well, that's right. They did take 44. I see that. I mean, again, unfortunately, if you did if you have your mechanical stop, then you get stopped out. So that sucks. Mike, you are out of here very early. Well, good job, Mike. Good job. Yeah, so if you did have a mechanical stop, you obviously got stopped out. Sorry about that. I thought we got down to 44 and a quarter, but then I looked. Obviously, I did not have a mechanical stop in there. That's why I was working it a little bit. But that is, it's okay. Sorry about that, Chad. Tough. It's tough sometimes when that happens. Sucks. You know what they say though? They say that the best scalpers are the ones that sell a low and buy a high, right? Because that's discipline. The Bank of England boosted interest rates on Thursday with the largest hike in over 3 decades. When the dust settles, the Bank of England the Monetary Policy Committee raised its benchmark rate by 75 basis points to a 14-year high of 3%. As it attempts to combat unrelenting inflation. However, the pound weakened against the dollar on the news while the UK government bonds sold off on the central bank declared it would hike rates less than the market had anticipated. All right, next support level we have is down around the 40 area. You can see we're very volatile here. It's a tough road ahead. The Bank of England governor said at his news conference the sharp rise in energy has made us poorer as a nation. The rates of new fixed term mortgages should not need to rise as they have they have done, further increases in the bank rate would require a sustained return of inflation to target, albeit to peak lower than priced into financial markets. So basically saying they're not going to raise as much. In contrast, the U.S. Fed, which said this week that the ultimate level of interest rates will be higher than previously expected. The Bank of England does not have this as much leverage in terms of aggressive monetary policy. An example of this would be short-term rates, mortgages that are prevalent in the UK, which will bite consumers hard if they have to keep renewing them in steeper rates. As we continue to downtick here, nice little trade down there at the 40 area. So there we made that one up very fast there. Got down to 38.75 and a nice little pop here against our 40 area. Well, this is going right. Let me give you some levels. I got 31 next, then we got 20 and then 10 underneath. 31, 20, and then 10. So we took an hour to go through the range, and we're trying to, go through the range on the downside in half that time. Only here. So we got 31 next, then 20, and then 10 underneath. So the market is, wow, you are on top of this there. I mean, Don, that's quick. So on top of this, the market is absorbing a lot. We had Fed Wednesday, yesterday's reaction to the Fed BS. Today, unemployment. Right now, reaction to the Fed unemployment. Basically, market is just absorbing all this stuff, trying to figure out what it's going to do next. It just seems like, bond market, gave it up also. So, all right, Don, take care. You have a good weekend. Have a great weekend. And glad you did okay today. Everybody's happy. It's Friday. It's unemployment. It's a great combination. Unemployment and Friday used to be where obviously we're always looking forward to unemployment. Well, we knew that it would be busy. Let's put it that way. And then here, especially the November one, because now we're getting into the holiday season. Obviously volatility is still in the market, and I think will continue to be in the market, but it is the holiday things, and things might just pipe down just a little bit. I don't know. We'll see. And so things slow down. We'll see what happens from there. And so, you're always, anticipating and I've had really good days on unemployment, and I've had one of my worst days in unemployment. So I've had this, and the worst thing about having one of your worst days of unemployment is that tomorrow is Saturday and all you do is think about it. Obviously, you remember those days, right? I mean, it was just like brutal. All right, we're bouncing off the 40 area here a little bit. So yeah, so that is, I remember I had those bad days, but then I've had some really good days on unemployment, and you can enjoy the weekend. It's nice. But those bad days on unemployment, and then you have to worry about it, and then it's like the next day, then you got the whole weekend just to dwell on it. Always a tough one. Yeah, this is the new age, Mike, where you forget to cancel orders, right? I'm talking about the old school age where I was standing in the pit and getting my knees cut off because I'm an idiot and I kept trading like a moron because I'm trying to get my money, but nobody was canceling me. They needed to cancel me. Did you like that? Did you like that phrase? Best scalper, sell low and buy high. Yeah, it's. I did not coin that phrase, by the way, but our pivot this morning is 37.84. I'll give you the levels we ran through on the downside here: 72, 58, 48, 40, and here down here. Next one is 31, 20, 10. Upside 94, 37, 94. Yeah, 3808, 21, 33, 41, and 52. All right. Finally getting a little bit of a bounce here. And that's our 40 area down there. And I don't know if you were able to stay long or wanted to stay long, but if you did, you had a nice little area there. Kept your stop in place. You didn't get stopped. So you done good. And we're coming back up here. Nice little rotation. Very tough to even like give you levels on this upside there. And these price action plays because the liquidity is just, it's very volatile. It's very thin. It's very thin. So, and every time I give you more levels one way, the market turns and reverses. That is your best indicator ever. Just want you to know that. Every time I give you levels and additional levels, that's usually the end of the rope, and it goes the other way. How many times have I done that? If you want any indicator, that's it right there. Let's see, the economic landscape is not looking better elsewhere. Tech giants are slamming the brakes on hiring, laying off workers amid higher interest rates, growing concerns over consumer spending. It's a stark downshift following years of investment in turbocharged growth stocks as companies go into cost-cutting drive and prepare for the worst. Amazon is pausing new incremental hires in its corporate workforce. Apple has tapped brakes on hiring for positions that aren't in research and development. Meanwhile, payment startup Stripe plans to cut more than 1,000 workers to prepare for leaner times. Lyft is laying off 13% of its workforce, marking a ride-sharing firm's second round of layoffs since July. And don't forget Twitter, which is poised to axe up to half of its workforce today after Elon Musk took over the reins at the social media platform. Negative productivity can be hidden when everything is going great, said some investment firm. It's easier to protect your margins when revenues are going up, but when they start to stopping or they're going slower, then you have to look at where you're spending your money. Predictions on how much stocks, bond, real estate prices are likely to fall top to bottom, and whether a mild or severe recession is likely missing the point. The point is that the extraordinary confidence of extremes and problems have been made possible, a set of outcomes that would be at or beyond boundaries of an entire post-World War II period. Whew. That is like big time there. The world is on a path to hyperinflation, which is a direct route of the global societal collapse and the civil or international strife. Wow, this guy is. It is not baked, but it is a path that is there treading. Investors should not assume that they have seen everything on account of experiencing the 73 to 74 bear market and the oil embargo, the 87 crash and dot-com crash, and the 2007 to 2008 financial crisis. They forgot the 1929 crash. If you're going to really get the gloom and doom, buddy, maybe you were just a little bit too young for that one. All right, look at this reversal here. the rally. Look at, I mean, this market, it's very tough to trade this. I'll be honest with you. Unless you're staying long from 40, which is the level that we had, I ain't telling you to sell anything here. I'll look at the 94 there, even the 94. It's up there. We got up here to 90, 90. So we could use a 94 here, but amazing. Look at this rally here. So we did have 40. That's the only, good thing. Well, look, everything. Yes, the U.S. did play a big role in fueling global inflation with the policies, low interest rate policies, and then you had the tax cuts with Trump, created massive opportunities for these corporations to do what they were doing, to hire people, to expand. But then that is creating the inflation because it's just there's a lot of money there, and the buybacks and this and that. So all of that stuff plays into global inflation, low interest rates for a long time, and obviously right now Russia, and China is going through, with their zero COVID policies, going to shrink their own economy big time. So it's time to pay the piper, I guess. I mean, this did not happen now, right? I mean, this has been baked into the economy for a long time. No, thanks again there, Chad. There are the levels for Friday. All right. Again, market now back top end of the range, right? 50-point range, 65-ish is the middle. The intraday range, right? We got down to 40 and change, up to 90. So that's about 50 basis point, 50 S&P points. So the middle is right around here, 65. Again, just market's just very, very nervous. Did I hold that by, no, from 40? No. I held the 48 just a little bit till it came back. That's the one I held a little bit there, and then I took 7-8 points out of the 40, which was good enough for me. If I knew we were going to rally 40 S&P points, I would have told you. I would have told you. I would have told you. I don't keep that stuff to myself. And if you knew you were going to rally 40 S&P, I hope you would have told me. Yeah, that was so again, we warned you about the 72 only because of how the market reacted at 74, which again, I was silly for not putting 74 down there. And then we got down to 58. That worked very nicely. And there was no heat. We got down to 48, which went down to 44 exactly. And somebody got stopped out and then rotated back up. And then we obviously got down here to the 40 area where we just got a little bit below it, and then boom. Pivot was 38.20. When was this? Floor pivot? No, I had 37.84. That's what I got. Or 38. You mean 38, 37.25 or 38? We haven't seen 38 since Wednesday. Seventh? You mean seven? I was like, wait, he's apologizing for the same number. What? All right. Hey, it's Friday. Hey, I think we should have done okay, considering we were writing some of these moves. Hopefully, some of you did. And again, some of the new folks that are here, welcome. We are trading mini S&Ps. We are looking for opportunities to scalp the market based on levels we gave out early on this morning when the market opened up. We use those as a guide to the day, and maybe Chad, if you can repeat those levels there for us, I'd really appreciate it if you're still here. Otherwise, I'll give them out verbally. And again, we kind of use those as a guide to the day to help us with our opportunities to trade, to look for areas of inflection that we believe the market will give us a chance to scalp. And right now, looking for about 4 points on our trades, and there they are for us, the levels that we gave out this morning. All right. All right. So we got up to, of course, 74, traded off of that. I think we get above 81. We go and push the highs. There are no other numbers coming out this morning. Again, floor pivot, data pivot. We use our own. I don't know where they get the floor pivot from, but it is what it is. We're not going to wobble over it. But they have their own metrics, and that's what they use to do what they're doing. Yeah, we did get busy this morning. It's nice to be busy instead of me talking for no reason. And we've had some nice opportunities. We've had to act quickly. Yes, indeedy. You get in, work it, get out. Next level is getting tackled. Work it, get out. Nothing. That's good stuff. That's good stuff when we keep busy and it's Friday and we're up a little bit of money and we can just take it easy. Yeah, you have to take the good with the bad. We know when it's slow the last couple of days and we're not doing anything, you have to save your bullets for the days when like today, so that we can have feel good about getting in, getting out, not getting upset if we got stopped, and move on to the next opportunity. Boom, boom, boom. That's what we're looking for. We did dip down to our blue band there and bounced off of it in case you were so inclined. All right, it is holding a little bit bullish here. So if you are trying to get along anything below the 60 area, you don't want to be long. Get below 60, we might go down a little bit, retest maybe the 50 and then even the 40 that we got down to. But right now, still a little bit, seems like we're staying a little bit bullish, but moving around. So pick your spots where you want to get in if you're looking to get long. If you're not, and if you're just happy, upside resistance would be up at the 94 area. Okay, here's that continuation rally to the upside. Again, we're a little bit bullish on this market right now. Like I said, anything below 60, lose your bullishness. Coming up here to our pivot, also looking at the next level of resistance we have is up at the 94 area to scalp. Not that it's going to stop there. It would be a target if you are long here. All right, we did get right up to our pivot there. Came off there a little bit. Nice rotation here in this market. They sold it off really quickly and came down to a nice little support area that we had, and then nice rotation back up here. And see where it wants to go. We might go retest our upper levels. Again, I said the best indicator you could ever have is me giving you more levels one way or the other. By the way, anything that I say as far as levels are concerned or any price action opportunities we do teach in our education course that we offer, if any of this stuff interests you, that you like to expand your um, knowledge of the trading or get different concepts and ideas to focus in on, we do offer a education course. Any of those of you who are interested, let us know. You can say something in the chat and we'll get back to you. Absolutely there, Mike, I get it. You got to take care of our health. That's the only thing that matters, right? I mean, it is what it is. Just hang in there, get better. All right. So obviously, our pivot area there, our pivots, not those other pivots, whichever they may be, Ninja or whatever. We like our pivots better. How's that? All right. All right. Nice little pop back down here. And hope we all are had a quasi decent morning. And if anybody has any questions, feel free to ask in the chat. You can ask more than one question. Well, I might limit to one question. Okay, there is a suggestion for you. All right. It is really good to make money on Friday, I can tell you that much. You can see here, we're definitely taking it easy now. Too many minds. Yeah, I mean, again, the one thing that we try to do here more than anything else is keep it very simple, right? We don't overcomplicate things. Our levels are there. They're not that complicated. There's reasons that they're there. And, we just, we don't have any indicators. The only best indicator I just told you, right? Best indicator you can have is me giving you more levels one way or the other, because that's the end of the road. It's a reversal for sure. As soon as I gave you more levels to the downside, boom, look what happens. We rallied all the way back up to the highs. That's about the only good indicator. So again, indicators are laggers again. So yeah, I mean, we try to keep it simple here because trading could get very, very complicated very, very quickly. And you can get, and I've been there, you get wrapped up in your own mind, right? Forget about too many other minds. How about your own mind? You get wrapped up in your own mind because you're like, wait, I did this. Wait, I should have done that. Oh, how did I do this? How did I get filled here when I shouldn't have? I didn't want to do that. What else? I should have sold the resistance area and I didn't do it. Now I'm guessing and I'm going to sell the next resistance area and it blows through it. Yeah, been there, done that, done everything you've ever thought about. Done it. I've done it. So yeah, keeping it simple, letting the market come to you, being patient. Those are very hard things to do sometimes when you're trading. All right, there's our move back up again. We're trying to go. We have been bullish here. I hate to say this. We've been very bullish on this market for the last 30, 40 minutes. If you did find a way, area there where you wanted to get in, maybe you did, maybe you didn't. I don't know, but we're getting a nice little push up here to the upside. If you are long, you're targeting the 94 area here. Okay, so once in a while, I do get it right. All right, there's a little pop back up here. Again, if you're trading, be careful. It's getting a little bit goofy here. We got down to 90 before, and I said this rotation back up here to 94 could be a little bit tricky. Trade it small if you're going to trade it at all, only because of this momentum right here. They completely given up the downside and moved up here to the upside, and you're getting a little bit of a rotation here. So trade a little bit smaller if you are going to take it. Got it right up there to 4.5. So, and we're getting a nice little push off of that 94 area. All right. Look at that. We didn't do anything from 40 all the way back up here, and now we're getting paid. That's good patience. You could have gotten long. I did suggest that we wanted to get long. I mean, we got bullish. Let's put it that way. How's that? I mean, I don't know if we got long, but we wanted to get. I did say we're getting bullish here in the market, and we're looking for a 94. And next level on the upside really is obviously the even area is going to play a little bit, but I would look at the 08 as a safer area if you're going to be trading up here. And yeah, it's just another suggestion. If you are trading, and we said 4 points before, but if the market's going to give you 3, 2, take it. If you're up, you don't want to, give it up. So take what the market gives you, especially since you're up now. You can be a little bit more defensive in your profit taking, right? All right, continue to uptick. Looking at again, remember I said an even area probably will work, but I got 08 is a little better area. Nice reversal here in the market, right? Very nice reversal. So if you cut into the jobs number a little bit, the full-time jobs have went down by 500,000, but part-time hires were about the same. And then, so multiple job holders are also numbers. If they have different metrics between all the numbers. If you cut down through some of these metrics, the job number wasn't as good as it sounded. So that number that was the top line number that everybody looks at was good, but then if you break down that number and how they got it, it's not as good. And I think that's why the market is kind of a little positive, taking it positively, I should say. Employers are cutting hours. No, they're cutting full-time jobs and hiring part-timers. So I think it's cheaper to hire a part-timer. You don't have to pay as much. It's a way of cutting their payroll number, their payroll expense, I should say. Don't forget, Sunday morning, at least in the United States, we are going to fall back on our uh, time zones, at least in the Midwest. So if you're in Europe, well, I don't know what they did. I think they do the same thing there. I'm not sure, but we will be, moving back an hour on Sunday morning. So I don't know what that means to you guys, but just remember, I don't know if everybody changes times, part of the country or what, but we will be here in Chicago. So again, if you're taking, if you're trading, I said the even area is always could be a area of that you might bounce off of a little bit if you're aggressive. All right. So again, we got up to 37.99. So again, we talked about the 38 even number being a little bit of a resistance area. I took the safer route, but if you did jump in there against it, nice little rotation here off of it. Maybe you did, maybe you didn't. I don't know, but that was just a suggestion. All right. Hourly bar, November 2nd. Last week. Concern. No, not. Let's see. I don't think those. No, actually, those big bars that occur are interesting in the sense that they could act as barriers to the market, right? So I would look at that daily bar would be one huge bar here that we were able to, snap out of it for a little bit, and then yesterday we stayed below it, at least on the rotation back, and now we're trying to stay. So we close above or into the middle of this, not so much an hourly, but like on a daily. Um, I would look at it as falling back into this range, which switches back into the range of the pre um, Fed decision. Now it brings us back into the situation here where, okay, this was because the Fed decided to do the thing with the rates. If we get back into this range, and then if we get above it, that becomes more important. We already tested below, and below they tested it. They tried to push it down yesterday, tried to push it down this morning. They didn't do it. So this would be the below part here. And we're not gonna, if we close above here, we get into the range from Wednesday, then it's important to see what it does if we get back up here and test this 3900 3907 area. And if we close below it, that becomes important to the fact that we might say, okay, the Fed, whatever the Fed was thinking, the market's absorbing, and I think it's kind of discounting it. Okay, so that's bullish. We come and trade in the middle of it, kind of neutral. We tried to sell below it. Yeah, they closed yesterday below it. That was negative. And then today, the fundamental news. Remember, I always say the fundamentals overtake the technicals. So this fundamental news here is definitely overtaking the technicals, because technically we close below this. This is very bearish until we get above it. So we did get above it. Now we have to close above it. And then we'll see what happens. Then we get into this neutral area until if we get above this or we get below this level here and close below it. So I think a lot of people were thinking, number was bad. We closed below that. Could be a little bit bearish. It was, and then they completely reverted and rotated back up. So kind of this is why this market's so hard to trade, because of the movement in the market. You get a technical signal, but then again, the fundamentals overtake the technicals, and then that signal is mute. I don't know if that makes sense. All right, coming back up here, looking at the 08. Again, the thing you got to remember is that these moves with the markets the way they are these days, very fluid and kind of tough to grasp sometimes. To get, you can't. That's why I think scalping is versus trade taking positions. I mean, look at this move here. We almost have 100-point move. What's your stop in if you're taking a position? So that's why I think that scalping keeps us in the game. You're not trying to find direction, not trying to hold on to anything. Just kind of trade in the market. All right, there's a little continuation pop again. Trying to keep you a little bit. We talked about being a little bit bullish here. Obviously, we do have dips that are, but if you're trying to find a place to, anything right now below 75, you want to be out of any longs. Got up to here to 05.5. We were looking at 8. So you get these like flushes to the downside. I wish we got filled at 08 and got that little flush to the downside, but they didn't. Can't ask for everything. We cannot ask for everything. All right, market here just got up to 6 area there. Well, 5 and change, right? Came off here a little bit. Support right now would be around the 80, 80 area, maybe our pivot 84 if you're looking for an entry there. All right. So now be a little bit careful at 08, obviously, since we snuck up to the 5.5 area. All right. I think we had a pretty good morning. I hope we did. I hope some of you did. Again, if anybody has any questions, feel free to ask. We're kind of like in like relax mode here. Dangerous to trade when you're in relax mode. Just pick your spots, I would say, with the levels. Keep your stops in place if you're going to. Go forward and do the same thing. And just be patient and wait. And right now, support would be around 80 to 80, or pivot 84. Anything below 75, you want to be out of any longs. Yeah, I know. That's why I took it. And you know what? It might still work. So, who knows? But be a little bit careful, obviously, if you're going to take the 08. Yeah. So again, 80 to 84 is our support area if we dip down, but anything below 75 out of any longs. And then if we get below 60 for sure, we might rotate down to the lows. Well, up down to 40 is a good chance. They might just pull the plug here. Who knows? We'll see what happens. But obviously, it's unemployment, so let's just be careful, be patient. If you're going to trade the levels. If you're not going to trade, have a great weekend. And we'll see everybody here on Monday, right? It'll be cool. Enjoy your weekend. Don't forget, we do change the clocks back. So sometimes our friends on the other side of the pond are like, where is he? Why isn't he here? Because I think they do come up an hour early, but it is what it is. All right, everybody, I'll talk to you. Have a great weekend.